Welcome to LeonCo and welcome back to part 20 officially. Yes, this is part 20 of 100 dividend a month challenge. So this is a very special video because our portfolio has changed drastically. Yes, our portfolio has reduced itself in size significantly, and we've reallocated our assets and our capital into different stocks and to different ETFs. We got rid of some of our companies that we had. So let's jump right in so we can explain what has been happening during these couple of days. So first of all, our big number, the 32. That is our big number. We are consistently back in our 32. This is our big number. We are very, optimistic to reach that 50 before the end of the year. We have a long way to go, but we believe that we can obtain it. We believe that we can reach it. So let's see what happens. We are in officially that halfway mark during the year. So in Disney, we've maintained our position. In GE, we've maintained our position. Tesla, we've maintained our position even though it's been going up and down. But as we move down our list, you've noticed that we don't have one of our ETFs. Yes, we got rid of our SPHD ETF that we had. So we sold our shares of our HPHD ETF that we have, but we reinvested it in one of our a new ETF that we have that gives us a monthly dividend. It's on a lower price spectrum, but the price for dividend that it pays, it gives us a good value for what we want right now. We wanted to reach the $50 mark before the end, by halfway point, and we want to reach the $100 by the end of the year. This is no way whatsoever that we recommend you guys to do this. This is a company that we found, we looked for it, we studied it. It helps us for what the goal that we have right now and what we have to want to achieve. So in the future, if you see it in our portfolio and you think that it is good, or it fits what you're doing financially and fits what you're doing investment-wise, you should take a look at it. And it's this company right here, the Global X Fund Global X NASDAQ 100 Converted Call ETFs. Ticker is QYLD. It's away in a price point of $24. But it fluctuates between the $22.24 and the $22.20, depending on the hour or the price where you buy it. But why did we invest in this stock? Well, this stock gives us, first of all, a monthly dividend. That is what we are looking right now, and it gives us around 22 cents per share monthly, which is a big gap and a big difference plus wise from what the HPHD gave us and the value of the stock. So we reallocated our assets from the HPHD to the QLD to get that additional boost with the dividends. Yet again, we recall that this is not a strategy that fits everybody. This is not something that we recommend necessarily everybody to do, but this is what we are doing right now because it fits what we're looking for in the future and for our investments. The second thing that we did, if you notice in our portfolio, you see it's much smaller, it's much simpler, is that we sold our shares in Sundial Grovers. Yes, we sold our shares today. Today is Wednesday. Specifically, we are posting this video on a Thursday, a difference from our normal Friday videos. So we sold it on Wednesday when it reached our break-even point with the stock. We figured that it was a good experience with it. It did not meet our expectations, so we decided not to go with a loss. And what did we do with that money? We allocated into QLD. And why is this? Because at this point, we want to have value in our portfolio or dividend stocks in our portfolio. We need our money to produce something. It just can't be staggered there. The only experimental stock that we are maintaining is Sirius, is because we are looking ahead into the future. Like we've always said, is a company that we are investing in the long run, upwards to 2 to 5 years, and that's why we are maintaining it in our portfolio. But our other company stocks, not regarding our ETFs, Disney, value stock; General Electric, that's our savings account; Tesla, value stock; Bank of America, a value stock; Verizon, a value stock. So our individual companies, which are not that much, technically there are only 5 companies in our portfolio, are good value stocks for the moment, and they are complemented by 3 ETFs. They are complemented by high dividend giving monthly ETFs. And why is this? Because we are combining value companies with monthly dividends. Why? Because we are creating a motor. A good analogy that we shared with you guys, and a good analogy that we like to share with other peers and other investors that we surround ourselves, is that this is like building a car. You need to first build its motor. Well, our ETFs are our motors. They provide us that value. First, they provide us that monthly dividend. We use those money that they gave us and we allocate it into companies. We allocate them into value companies. And this is our strategy for this year. And this is our strategy in some ways for our investments. So this is how our portfolio has been shaping up during these couple of weeks. We know it's been somewhat very obscure, because if you notice how our first video, how we started, the companies that we had, the type of investment that we did, and how it has drastically changed throughout these couple of weeks as we've continued on during our challenge, it's something very interesting. But this is good because this gives you a chance and give you opportunity to see how during the year, during the investment life cycle of an investor, how he needs to modify his investment and he needs to modify his strategies regarding the value or regarding the goals that he wants to set forward. So we wanted to share with you guys. It's a little bit early. Instead of posting on a Friday, we're posting on a Thursday because we thought that we should something good that we wanted to share with you guys. We wanted to share with you guys as soon as we did all of these investments. We wanted to give it that and hand it out to you guys. So this is us. I hope you guys are staying safe, staying healthy, and always remember to have that king mentality.